NFTs, what are they? What is cryptocurrency? Why do people keep saying blockchain? These are all questions that many of you have, and I used to have myself. And ultimately, all of those questions are going to be answered in this video. But to start, and the NFTs and cryptocurrency in general, they truly will be unless if there's immense regulation by the US government, they will be the future of how we exchange money. So, what is an NFT? It's been rising in popularity for several weeks now, but we really don't, many people still don't know what an NFT actually does. So, let's break down NFT, non fungible token. That's what it stands for, that's the acronym. And we can break that even further into two sections, non fungible and then token. So for the non-fungible part, what does that mean? Well, let's first get the meaning of fungible. Fungible, as you can see here, is means able to be replaced by another identical item. And what that means is that, say for example that like my microphone that I'm currently recording this on. So this microphone is a Blue Yeti microphone, and it's a fungible item, mainly because Blue Yeti sells the exact same version of this microphone, and they probably have hundreds of thousands of the same microphones that are currently being distributed around the world. So that's what fungible means. Now, in terms of non-fungible, non-fungible would be kind of like my pizza. Say for example, I ordered a pepperoni pizza, from let's just say Papa John's, because that's the first pizza chain that came to my mind. So from there, I have this pizza, and then I change it up a little bit. I take the cheese off the pizza, and now all I have left is tomato, pepperoni, and the crust part. That would be non-fungible because there is no pizza in the world that looks like the pizza I just made. So it's unique, and it's like art paintings. It's like the Mona Lisa. It's like Van Gogh's paintings. There's only one of a kind, and that is what essentially builds the premise for NFTs and art. Now, for the final part, the token part, what does that mean? What token means essentially is it's part of the cryptocurrency link, and we'll explain that soon. But all you need to know right now is that NFTs are practically just art paintings that you sell online. And it's one of a kind because you technically speaking own that art painting, which is why you see this picture of Nyan Cat here, or Nyan Cat, and you see that it's owned by someone. Since it's one of a kind, someone owns this and bought it using an NFT. And this fits into the broader scope of cryptocurrency and fits into what it does. Now, in terms of what cryptocurrency does, it's sort of like a bank where you go online and you have like a transaction between yourself and someone else, just like how you would for a regular bank where you transfer money from one place to another, or like a credit card where you transfer your money from your checking account to, let's just say, that Papa John's pizza. So also, this video is not sponsored by Papa John's in any way, so I'm not even sure if I'm allowed to mention them like this. But ultimately, what happens is that if you want to buy pizza using a credit card, then you just swipe your card and then it goes to the bank. The bank will make sure that you have money from your checking account or you have money from your credits in your credit card in order to purchase that pizza. If it sees that you do have the funds needed to buy that pizza, it approves the pizza purchase. Otherwise, it denies it. It will reject the payment and you won't be able to get that pizza. So what cryptocurrency does is essentially the same thing, where I buy pizza online using crypto. Like I could use any kind of cryptocurrency, like Bitcoin or Ethereum. Those are the different types of currency options. It's kind of like the U.S. dollar, or maybe something similar to like stocks, where you can have different types of currencies. And what basically happens is it then goes to something called the blockchain. And obviously the blockchain is a term all pretentious people use to make themselves sound smart, but they really just don't know what it is. What blockchain is, though, it's similar to, simplifying it, it's similar to what a bank does, which is verify the purchase and make sure that you have the funds in order to actually purchase the item. And for cryptocurrency with blockchain, that essentially does the same thing. Blockchain is a term to describe the system that verifies it. And how it verifies it is, instead of having a bank control the payments and see all the payments that go through, instead it's a bunch of computers. It might, if you participate in cryptocurrency, your own computer is being used in that process to verify the purchase. So all the computers who use cryptocurrency will look at these purchases, will look at my purchasing of a Papa John's pizza online, and they'll check to see if I have the funds to do so. If I have enough crypto in my account in order to pay for that pizza, and the computers look at it, and if they don't see that I have enough money, then the computers will look at it and say, "Uh-oh, this person doesn't have enough money, reject this payment," and it won't go through. Otherwise, if I do have enough money, then the computers are going to make it seem like it's normal, and thus my transaction goes through. And that is essentially what NFTs, not NFTs, essentially what cryptocurrency is. It's bringing the function of purchasing through a bank and using a bank in physical, like in person, online. It's putting it online. And the reason why that is being called the future of currency is because of how convenient it is. Compared to a bank, it's way more convenient. All you have to do is set up a cryptocurrency account using Ethereum, using Bitcoin, and you're all set. When you want to buy something complex like a car, all you just need to do is use blockchain and go through that system in order to buy it. If you in comparison, if you try to go through a bank, you have a lot of bureaucratic hurdles to go through to buy a car, and it gets even harder if we're doing stuff like buying a house, where you have to have you have to maybe take out a mortgage, and you might have to take out loans. With cryptocurrency, the entire thing is simplified to just a black and white question, which is, do you have enough money to buy this house? If so, then please give this much cryptocurrency. Otherwise, you can't get the house. And that is what makes it the future. It's simplicity and the lack of the lack of necessity for a middleman, for a bank, or for anything that's between you and your Papa John's and your horrible Papa John's pizza. I'm not. I mean, for those who like Papa John's, I'm not disrespecting you. It's just Papa John's there's so many other better pizza brands. Anyway, I think I should probably stop using Papa John's as an analogy. But going back to the NFTs, the reason why someone can own this image of Nyan Cat, even though I can literally see it for myself right now, and if you're watching this video, if you're actively watching, you can see this image. It's because if you're trying to buy something online, then if the computers approve it, and especially if you're trying to buy something one of a kind, then it's verifying that you own that thing. So if I buy this Yeti microphone, and if it was scratched to make it half blue and half white, then I could then when I buy online using cryptocurrency and the computers verify my purchase, then they see that I do in fact now own this blue and white Yeti microphone, and since no one else has this blue and white Yeti microphone, then I have a one of a kind where no one else has this. It's kind of like, again, art paintings, and this can be brought online. It doesn't have to be a physical item like a microphone. It can be like Nyan Cat, where I buy this Nyan Cat image, and the computers verify it that I now own this Nyan Cat image, and it's driven by hype. It's really all hype. Because it's as much hype as trying to buy an art painting or trying to buy shoes. It's something that really is not physically associated with value, but we as humans use psychology to give it a value, and that is the basis of NFTs. Then that's where the token comes from, and the non-fungible token. Now, this is just another section of where cryptocurrency is going to. It's going into these auctions where instead of you having in-person physical auctions of physical items, now it's moving online with online auctions of online images. That's why you saw a $69 million deal, a $69 million auction of a painting that I believe was called the first 500 days or the first 1,000 days, where it was just a bunch of screenshots of images all stitched together into one image. It's because of hype. Obviously, if you're a middle class person, it seems very unreasonable to buy that kind of image for $69 million or to buy this Nyan Cat for a large amount of money. But that's mainly what wealthy people do. They assign value to different things, even if it may seem ridiculous. And this is again just one part of cryptocurrency that's expanding, and there's no doubt that cryptocurrency is also going to expand to other places. Soon enough it will expand into houses, into the retail market, and it's also it is expanding already to the retail market with Tesla. Elon Musk started accepting cryptocurrency, started accepting Bitcoin for Tesla several months ago. They allowed payments of Bitcoin, and thus people started using it. And that's just another feature of cryptocurrency. But there is a caveat to this, and this is where it starts to go a little bit downhill for cryptocurrency. Elon Musk just a week ago stated that that Tesla will no longer accept cryptocurrency as payment, that he will no longer accept Bitcoin, and his justification for doing so is mainly that cryptocurrency it takes a lot of energy to run. You have a bunch of computers who are trying to verify your purchase, and it's just a whole load of computers trying to verify it. And then if you also have to factor in the amount of people who are using cryptocurrency. With millions of people using cryptocurrency, there are tens of millions of computers that are trying to verify purchases every millisecond, and that takes a lot of energy. And right now, all of that energy is being powered by fossil fuels, and that is contributing to the global warming problem that we see. With an NFT that costs just a couple $1,000s, it consumed 8.7 megawatt hours of electricity, which is a lot. Megawatt hours, when you go into the megawatt hours, that starts to power buildings, that starts to power houses, and if you go into terawatts, that starts to power nations. Where right now we see, according to the Harvard Business Review article, that 0.5% of global electricity production goes to Bitcoin, 110 terawatt hours per year. And that's roughly the same amount of energy consumed by Malaysia or Sweden. And that's a heck of a lot of energy that's being used. And that's very impactful for climate change, where we see that a lot of our natural landscape is being destroyed by pollution, by polluting the environment and making our air less clean and more toxic for both our own health, but also for the trees and for all the natural beauty that the earth brings. So this is where the government has to start coming in. And obviously with cryptocurrency, it's supposed to be very decentralized, and the blockchain system is also incredibly decentralized from financial institutions. I mean, you're comparing a bank which is very directly tied to Wall Street, and then you're comparing it to cryptocurrency and blockchain, where its main purpose is to not be a bank, is to not be a large institution that can see your payments. And that is where the government might have to step in, because cryptocurrency is the future, but it, just like tech companies, it does need some sort of regulation. And unfortunately, though, it's the U.S. Congress is responding to cryptocurrency the same way it responded to the internet several decades ago, with ineptitude and a lack of understanding of this system. If you ask most people in Congress today what cryptocurrency is and the problems of cryptocurrency, they probably would not even know how to answer that question, because they don't know about cryptocurrency. And a lot of them is excuse my language, but just old people in Congress who don't know what cryptocurrency is and don't spend the time to understand this kind of system. And that's important, because if we let this continue as it is, it will eventually end up like the big tech companies that you see today that are huge conglomerates. And you'll see people benefiting from this to the point where antitrust gets involved. And that's why it's better to start regulating the system now, to make sure that we find a way so that it doesn't consume this much electricity, where you can also make cryptocurrency also more versatile, instead of having it stored in very cold areas, and that will ultimately make people more confident in cryptocurrency, and will allow it to make it the future. Now, this is going to eventually become a massive fight in Congress, though, because it's essentially, which is better, banks or cryptocurrency, having big traditionalist status quo financial systems, or having an untapped, unregulated, growing but also very decentralized system that is blockchain and cryptocurrency. And this is where lobbying starts to get involved. Cryptocurrency has already turned to K Street for assistance in making sure that the government doesn't start regulating cryptocurrency. And in the meanwhile, you have banks who are actively going against cryptocurrency, and you have Wall Street, some investors who are friendly towards banks, going against cryptocurrency and endorsing against it. So that's where the fight starts to end up at. But ultimately, for what you need to know, cryptocurrency is growing. It's currently experiencing a bubble similar to that of the internet, and the bubble might have just burst with cryptocurrency, with Bitcoin value plummeting 8%, and Ethereum also plummeting in the dozens of percents. And it's a new thing. This kind of currency, this kind of technology, it's maturing, kind of like the internet. Back then in the 1990s, it was very unmatured, and it was a new prospect where everyone wanted to get some cash in on it. And as a result, a bubble was created, and the bubble was burst. The same thing is happening here with cryptocurrency, and now that the bubble has essentially burst, we're now going to see a maturation of cryptocurrency, where we see cryptocurrency potentially going more into the mainstream market, with Coinbase already starting to trade on Wall Street. We can see this kind of currency and this kind of technology becoming more widespread in the years to come. So that's the end of this video. I hope you enjoyed it. This video is now adjourned, and I'll see you in the next one.